Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. How's everyone doing? Pretty decent sell-off. Then they pass the omnibus bill and bounce back to some key levels. We will review some stuff. Also setting up for potential bounce patterns. We'll have to see unless they're invalidated with the PCE numbers, durable goods, and personal income tomorrow. What do you mean? What intonation was that? Also thinner markets today. Although with this amount of sell-off, the volume was not as low as it could have been, but it wasn't great. Good afternoon, Patrick. Good afternoon, Jacob. John, in the morning before the data comes out, we might retest the lows from today. Very much possible. I hope everyone made money or at least didn't lose money today. Hey, CD. Good evening, Anissa. Storm secured on the homestead. Hope you're all hunkered down for everybody in storm territory. Hey, Dave. Nice little 5-minute reversal head and shoulders. Should do a check. There was a inverse head and shoulders at the bottom today on the S&P. 200 million shares exchanged on Tesla. Tesla was pretty bloody today. Howdy, Paul. Mr. Grinch in town from Vin. Welcome, welcome, welcome. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Let's just leave it as that at that. So, you know what? Let's see. After we did the live stream this morning, after that, what do we have? We had the consumer leading index. That was a pretty big miss. Expected at minus 0.4, coming in at minus 1%. Also throwing more fuel on the downward spiral. And then minor was Kansas City Composite and Manufacturing, both coming in worse than previous and worse than forecast. But we were already headed lower at that point. Tomorrow, 7:30 Central, 8:30 Eastern, so 1 hour before the open, we have some very key numbers coming out. Personal income and spending, durable goods, and actually the most important here in my mind is the PCE price index year over year and month over month. Month over month forecasted 0.3, year over year at 6. Or that was the previous, they forecast of 5.5 and 0.2. So the month over month is expected to come in. Now, if this comes in distinctly better, you could see a decent rally. But it's all going to depend on all the numbers. But I will be focusing first and foremost on that. And we'll go over to key levels I am watching. Then we have Michigan consumer sentiment final numbers. Forecast at 59. Prior month was 56.8. Consensus at 59. And the other consumer numbers from the other day came in stronger. Would not be surprised to see these come in at least at 59. Do not ignore the 5-year inflation expectations and just the short-term out inflation expectations. If they come in better, it could also fuel a rally. So do keep that in mind today. Pretty bloody, except for healthcare holding up pretty well. Again, a safe haven right there. Actually, semiconductors, Nvidia taking it in the shorts today. Some mega caps getting hammered today. Amazon down 3.43, Tesla 888 basis points, Google over 2%, Amazon over 2%, Microsoft over 2.5%, oil reversing, and XOM and Chevron coming into also. There wasn't much area to hide except for healthcare today, and you see consumer cyclical and technology really getting beat up. Fed watch is still at 70% for the 25 basis point and still in fear mode. What else do we have to cover just for the point in case you missed it this morning? Let me get this up. Again, tomorrow we have normal closing time and everything, so nothing shifts tomorrow, and I will be doing a live stream after the close. And then Sunday, nothing opens back up. It's the regular opening time on Monday. So there will be no live stream on Sunday. All right. We had the decent sell-off. What I also did is do the reverse harmonics, since this eked out a new high with the sell-off once it passed yesterday's low. And the reverse harmonics gave me 37.89, 37.74, as already noted, coming down, pretty much hitting that 37.89 level with that little inverse head and shoulders. Then you got some decent momentum off that bottom. And so I put on the retracement harmonics from the highs yesterday overnight to these lows, and I was targeting between the 50 and the 62.5. So let's just zoom out for 1 second. If it will let me. So what am I keeping an eye on? Because this is technically a double bottom pattern. So if we were to rally, if the numbers come in the way people like tomorrow and start a rally, especially getting a close above 38.70, which could be a front run pattern for the potential double. Remember, Santa Claus rally technically starts next week. We have a shortened week, Tuesday, Wednesday, Thursday, Friday next week. We do have a potential double bottom on a close above 39.1975. All right. So we have that running up, and that could take us potentially, if it were to shift, not saying that this is in the cards just yet, but we have a valid pattern, and that could take us back to the area of the 200 on the S&P. What I'm watching for, though, is if we stall out in this area overnight, this between, remember, we watch for reversals between the 50 and the 62.5, coming up that 50 and little pausing there. Still got 20 minutes left on the close, but this is the reversal area. I'll be watching overnight if we attempt any rally, 38.54 to 38.70. If you're looking for key support for overnight, the area I would look at would be about 38.22, then 38.14. You start getting a key close below 38.14. As John said, we could then easily retest the low areas. But that's how I'd use these harmonics to help map out the path for the short term. If we break, if the numbers come out the way people don't like, and we break below today's low, it's 37.74, and then my key level is 37.57, and that's especially on the closing basis. Why you close below that, the probabilities shift then for more low price action. So, and in terms of volume today, I mean, it's higher in the last couple of days, but it's even lower than last Thursday. So, the thinning out markets going into the holiday weekend. So as long as this double does not get invalidated, possible setup next week for a Santa rally. Sell-off tomorrow could completely invalidate that pattern. So just because you have a potential pattern does not mean you just magically buy the market hoping for a Santa Claus rally, but we do have the pattern in place now. So that's what we have. Let's see. The NASDAQ does not have a potential double. NASDAQ does not have a potential double. Also, NASDAQ, after closing below 62.5 back on Tuesday, at least hit that 75. I put on, from this pausing bar, the harmonics from the high. If you wanted the short term, yes, you could have also done this. But we went through those easily. You see that? And that just reinforced that 75 level. So I had to shift to the harmonics from the high to the low on the Tuesday, which gave me 10,881.50. Coming down to that nicely. Not a nice inverse head and shoulders on this, in case you were wondering, because upward sloping. You could even use a flat neckline on this. It was pretty much the pattern was in the S&P, but this did get some momentum ignition, breaking out, retesting it, rotation zone, and then holding up to there. So just wanted to cover that. Your key level, though, your key level that I will be watching, especially overnight, if it does rally, is 11,130, and then on a closing basis, 11,195. But there is no double bottom or potential double bottom pattern on the NASDAQ. We break below today's low. You see the next major harmonic coming in right at the 87.5. So we have the retracement harmonics, the projection harmonics, and a significant level down here about 10,713. So breaking down tomorrow, that would be my first major target. So that's where we sit with that. The Dow, come on, Dow. We do have, I'm not going to go over all the detailed stuff, but overnight I'm watching, we bounced back to the 50, to the 62.5, and had this little reversal bar. So I'm focusing on between 33,207 to 33,321. We start getting that close above 33,321. I'll watch for potentially a retest of the highs, and we do have a potential double bottom pattern. You can see it here nicely on the daily. So to confirm, it would need a daily or at minimum 4-hour close above 33,663, and it is still a potential. If we break below today's lows, I'm still focused on the 200, 32,420 area. We have a longer term harmonic there and the flat 200. The Russell, just by the way, also does have a potential double bottom. The key levels I'm watching on here, 1766 and then 1774. And if you want, you can always use your little harmonics from this low at around noon to the high at so far the 3 p.m. central high, and you can watch for the retracement, that 62.5. Don't need to map it out for everybody here. George thinks that the numbers, the PCEs will come in better than expected. Well, you do have your bullish patterns now on 3 of the 4 markets. Yes, thank you for putting that in there, Sterling. So we have on 3, we have on the S&P, Dow, and Russell, we have potential bullish Santa rally patterns. Real quick, the DAX, which I was not focused on. There is no potential double retesting and then bouncing off the 50. If we head a little lower in that, there could be a potential double, but there's not a great pattern in the DAX just yet. So nothing to talk about there. Notes, 10-year notes, extremely quiet, inside bar. So I'm still focused. If we break below today's low, or yesterday's low, sorry, then I'm watching for the downward break, and above yesterday's high, I'm watching for the retest of some higher levels, especially the possible 114.18. Dollar index, which I'm still watching to see if this bottoming pattern does trigger. Not triggered just yet and not invalidated. So nothing yet going on there. VIX. VIXY, you see the quick spike up and reversal, but this has not invalidated the potential double bottom yet. It is still in play. Now, if we get another major rotation back down because of this huge spike up, it will be invalidated. Let's see. We have not gone over to SPY yet. Let me get to that in a second. Crude, you know, little bit area hitting right off that 75% area. I'm still watching for a complete pattern top. There's not much going on in crude. I would not force anything personally in crude though, but on any rally, I'm focused on that 50. Still no close technically above the 62.5. Interesting enough. Now we have 11 minutes left, but I doubt. I'm going to have to glance back and look at settlement because sometimes you get some weird settlements in crude. Hey, Jake, thank you, thank you, thank you for the super chat. Big shout out to Jake. Thank you for supporting the channel. Thank you. That's wonderful, Jake. Thank you so much. Yes, thank you. Everybody give a shout out in the chat to Jake. That's a great, great member here. By the way, I promise we'll get to the spiders. This is technically a double. It's almost a horizontal, but you can still technically trade it as a double because of the relationship between these two highs. So I am still watching. We do have another potential pullback pattern only. You know, it just takes us back to this key area, but it would need a daily close below 1782. Just keep an eye on that because as we like to trade around the core, or I like to trade around the core position, that's a nice little pullback area. A nice little pullback area there. Let me get to Bitcoin. I saw a request for that. Then I'll get to more comments and we'll get to the spiders and the Qs. Bitcoin's in Deadville. There is nothing. There is really nothing going on here. You know, you had Sammy back out on bail now in his parents' basement. Other than that, his co-conspirators pleading guilty. I'm just waiting for the next shoe to drop. And that's going to get interesting. But there's not even a great pattern to trade off of here. So personally, I would sit on my hands. Let's see, what else do we have? Hey, Dave, thank you for the super chat. Again, everybody gave a shout out to Ramsafall / Dave. Thank you so much. Wow, yes, massive double. It's the holiday season. Thank you for supporting the channel. Thank you very, very much. That is wonderful. I agree. Echo that again. You guys are awesome. Yeah, we got all the shout outs. Thank you. All right. We'll get to Tesla, then the spiders and the Qs. Tesla had to update the keep levels. We can't even get a pausing bar on the daily. Now, going into, if we start getting the rally based off Tesla's just getting absolutely brutalized, I am expecting, if you're still trailing this short or have any, whether they be option positions or anything else, do not be surprised at some point within possibly the next few days to see a massive reversal momentum rally in Tesla. Does that mean a long-term bottom's in? No. Okay? But it's just getting absolutely brutalized here. And look, if we did get a massive momentum rally, at this point, even 162 is key resistance. So could it bounce, from this 125 area to 162? Yeah, easily. Will there be a lot of people claiming that the low's in? Yes. Is the low's in? Not probability-wise, not technical-wise, not anything-wise. So I just be careful on that. But if you're trailing, do not get caught off guard with that. Do not get caught off guard. All right, the spiders coming down just in front of the next major target area. That was such a bummer, just missing that full-blown target area and the full-blown gap fill from back on the 9th. Technically, not the full-blown gap fill. Technically, not a double bottom. So what does that mean? I'd be watching the futures, which have slightly higher probabilities with their patterns than the spiders. But if the futures trigger, you're probably going to get the close above this 387.41. And then what would I use for targets? I'd use the gap fill targets to the upside. So your first gap fill target would be back to the 15th of December. And if we got a stronger rally, remember, here's the 200 on the spiders. You have another gap fill from the 14th. So those are the targets. If we get especially a close above Wednesday's high, those are the targets I would be utilizing. The first one would definitely be a stop reduction, especially with the hooking over 50 and the top of the rotation zone right there. So these are the levels I would set my alerts. And then beyond that, other key areas, especially for stop reduction, 392.63, that would be the 50% of this sell-off. And then the 397.10 would be another great area for either partial profit taking in front of the gap fill or raising stops. That's exactly how I'd map that out. Now, if we come to new lows tomorrow, these levels will shift down. But if it's just eking out slightly new lows in the S&P and the spiders, the S&P would not invalidate the double bottom pattern. And since there is no double bottom pattern on the spiders, you don't have to worry about that. I'd still use the same thing. If you were looking for a front run pattern, this is where you want to use this little retracement harmonics and focus on, at this point, the level would be 382.67. And I'd want at least a 1 hour close above there for a front run pattern. I would prefer, even if let's say we did a decent rally tomorrow back to the S&P and triggered, I would look to be patient over the weekend and enter Monday when things reopen at 5 p.m. Central Time. That's how I would look to do it. Personally, can't give you specific trading advice, but that's the way I look to do things. On the Qs, and we'll take a look tomorrow morning also for the levels lower, but we already have the harmonics. So the next major area on the Qs is 259.63. There is no potential bottom on the Qs, or double bottom on the Qs. Same high, that's the same high I would watch, the high from the 21st, the high 274.78. The front run area at this point, if we don't make a new low tomorrow, 270, about, what is that level? 270, crap, about 16, about 20. Those are the key levels I would be utilizing. There aren't any gap fills till all the way back till the 14th. The targets I would be utilizing on the Qs, should you get the close above Wednesday's high, would be the major breakdown zone, which is about 280.83. And assuming we don't make a new low tomorrow, I would use 276.32 as a stop reduction, and then 277.86 either as partial profits or another stop reduction in front of that, because they are also, the daily rotation zone is in the way. So that's exactly how I'd map out the spiders and the Qs, given we have the potential doubles, again, in the S&P, Dow, and Russell. And for anybody new, potential patterns can be invalidated before they're triggered. So you don't go, hey, double bottom, I'm just going to magically be a buyer. No. You wait for first, they're not even confirmed. Second, they're not even triggered. I have to state that because we get new people watching all the time, and people have been taught, from my perspective, incorrectly with double patterns because they front run them way too early. All right. Well, you can go back and revisit price projections from the last PPT video for 2021, and you can let me know. Well, thank you, Dave. 375 pre-split. So where are we sitting? Yeah, that would be 375 pre-split. So you'll have to let me know. I mean, these same levels have been we've had them on the charts for a while since it triggered the massive head and shoulders, but that wasn't triggered till June. The harmonics have been on since for a long time. So I'll maybe if I have some time I'll go back to do it, but I'm sort of pressed for time. No, confirmation comes and then the trigger. Because a pattern can be confirmed, remember, especially for beginner traders, a pattern can be confirmed. So what would confirm this on the S&P? You simply get a trade above 39.1975. You don't have to get the close above there. You could peak above there and never, and this would be at least a 4-hour close above there. If you wanted to try to play it intraday, if you didn't at least get a 4-hour close above there and preferably a daily close, it would not be, it would be confirmed but not triggered. Okay? Why? Because the probabilities go up substantially by waiting for a confirming close. So a pattern, and I'm mixing up my words. A pattern is potential until it's confirmed. It's confirmed merely by a trade above the high for a double bottom, at least by a tick for the futures, at least by a penny for stocks or the minimum increment. It is only triggered on a corresponding close. And for the higher time frame patterns, you need the higher time frame closes. All right. Well, thank you, Royal Palms. Great. Great, George. Amadeus is all in for the bounce on Tesla. Remember, Tesla, any bounce is going against the trend. So, but we're going to have fourth quarter delivery numbers coming up if we do get the Santa rally, and it's just been substantially oversold. But so many people on a bounce will rush in and think the bottom's in. Hooray, hooray, hooray. We're going to whatever silly numbers they have out now. And then at some point, it'll roll over again. Well, I'm glad you're balanced with your trades. That is a good thing. All right, what do we have from the very beginning? There was a stock. What did you want me to look at? Can we look at PSX? And then I'm going to keep it short. Holiday season. We don't need to. Is it ready to roll over? Well, you know, you start breaking back below about 97.50 area. I'd be watching for the more substantial pullback, and I'd be looking at that flat 200 area as a key target. You got some harmonics in the way, but that's the major area I would be watching. If you're breaking down that flat 200, especially if oil rolls over again. It's a stronger play. Other than that, based off the daily, you got the breakdown play and the daily level. The first area I'd be watching on the daily, to at least if you're going short, would be this 93.78 to about 92.04. Remember, between the 50 and the 62.5. If you're looking for a long, it would have to get down at least to this area right in here, between the 200 and the 50%. Why? It's a prior breakout level. And you have that magnet of the 200 there. So I would not do anything from a long side unless it got down here or broke back above and closed above about 105. Would be the only, and that would still be aggressive to the long side. And we also had the double, which I forgot to point out here. Let's just double check all the targets. And that was completed even if you used the aggressive targets. So the bearish pattern that was triggered back on the 5th finished. Okay? So you're out of there. Now, the only other thing I want to check is if you're trying to play this to the long side, you get a close above this 105 area. You can't get super bullish until you get a daily close above 107.68. Those would be the levels. But right now, based off of this kind of pattern and keeping an eye on crude, you know, even if crude ekes out a little high, I doubt you'll get that key close above 105. I'd be watching for the rollover play once crude rolls over again. So there we go. What do you think about Amazon? It bounced off a weekly channel from March 2020. Let's take a look at the weekly. Yeah. I mean, Amazon, I'm still watching to reconnect just from the probabilities, at least with this 80.76. And I think we will do the full round turn to the COVID lows. Based off the daily, on any rally, I'd be watching for the rollover play back in the daily rotation zone. If it did pop more than that, it would be this descending trend line. Could happen with if we get the Santa rally going on. But right now, major technical damage is done. And there's no fantastic bottoming pattern just yet. MO triggers a daily top and reconnected with the weekly rotation zone, but still remains under the weekly 200. Thoughts if it closes tomorrow over the 200 week? I mean, nothing's really changed with that because it's nowhere near its stop levels on this. It did trigger this double top pattern, so you could see some pullback still. If you're not already in things, it's nowhere near a stop level. If you're not already in something, I'd use tighter stops and wait on a close back above the 200 for the daily to play it to the upside and just use tighter stops because your reward to risk would be off. Until then, I'd sit, if you're not already in it, I'd just sit on my hands and let this play out. If you're already in it, you already have a stop and you're nowhere near a stop level. The stop level technically, if you're not using an aggressive stop reduction, which you wouldn't on this MO trade, is 42.70 on a closing basis. All right. Thanks again for shouting out the super chatters, everyone. So, do you see Nike pulling back soon? Nike has been consolidating for 2 days after earnings. No major selling like the rest of the market. Nike's at a very key level right here. It has held up. We got the little gap down and reversal today. This double is not invalidated yet. That's the only thing I'm watching, and I'm keeping an eye with Nike to see if tomorrow we close above the 200. Why? If we start getting a rally on the market with the way this is held up and close above the 200, it could be worth a little pop play to the upside. The only challenge with that is you have a major significant level just overhead right here at about 121.50. So I would only be trading that with relative strength on the Santa rally in the market. Other than that, I'd be setting an alert for this 114 area for a breakdown play as long as we don't substantially get above 121.53. Why? Because then it'd be a magnet back to the 200 and a potential gap fill play. Do I think FDX can hit 180 tomorrow? If we get a rally, it could. It could if we get another. I mean, this held up remarkably well today. A little gap down and then massive rally. So yeah, if the market starts rallying tomorrow, I would not bet against 180 or even 181.67 after the double hit the stop reduction. We did not close above that key level, but intraday at that point, if it started rallying with the market, I'd just be out of any position there and be targeting that 181.67. All right. Could you look at BRKB, big weekly double bottom? Where's the... There we go. I didn't put the period in there. I mean, it's triggered on the weekly and pulled back to the breakout area. So, you know, as long as you're not gonna, as long as it does not close back below 282.24, it's well, I would not update that yet. As long as it's, because we didn't, sorry. As long as it doesn't close below 277.96, it's still potentially playable to the upside. If we start getting a nice little Santa rally on, it's pulled back to the rotation zone and just breaking below the candle bodies. Remember, we watched between the candle bodies and the wicks for that pullback area. So I think it's definitely still playable. On the daily, let me just see this. And on the daily, here's, if you're not already in this, this could be an interesting pattern going into, if you get that close above this 308.54, you could be triggered as little double. It's valid because the first and second targets are in the move that started it. So that could be a little front run pattern. And then you could target on a little bigger time frame the 330.39 area. So that's something to keep an eye on for Berkshire Hathaway, because if we get Santa rally, that could definitely trigger. Retest these highs and then aggressively, and this is where, this is one aspect, because you're in a bigger pattern that I don't have a problem if you want to, I'd take something off, but then try to roll the remaining pattern into the bigger weekly trade in case it does get a run on. So that's a very interesting setup also. And this was it. We'll call it it. Thank you, Sterling, with CRM. CRM, it's already done the round trip to the COVID lows to the highs. It's already round tripped it into the window, so it's fulfilled that. Could it easily come down and retest 115 area? Yeah. The only thing I'd be keeping an eye on from the bearish side is it's really getting, you got some divergences here. You got cycles to the bottom. So I'd be watching for a CRM potential bounce and then a short setup. Personally. Unless we just get the market just tanking. This on a bounce and then a rollover play could be another really nice one. It has run out of support. The only next major support are these lows, not just from COVID, but from the spike lows in November of 18. You break them below those lows, watch out. I mean, their P to E is still off the charts. Now, longer term, if you go all the way back here to that key low, longer term, this could return if with the bear market unfolding next year that we still expect. Longer term, this could unfold. Once it breaks below this 115 area, you could easily return to 85. And that's a breakout zone from back in 17. So yeah, longer term, there is more downside, especially with the fundamentals on this thing. Short term, I wouldn't be pressing my bets too much short term here until it gets a bounce and then another substantial rollover. All right. Thank you, everybody. Everybody have a fantastic evening. Just seeing where crude officially settled. Well below the 62.5. So nothing still bullish on crude. Not triggering the bigger pattern just yet. With that, I'm going to wrap it up for now. I will see everybody back tomorrow morning at 8 a.m. Central. Thank you for being here. Thank you very much, Anissa. And we'll wrap up the holiday, well, the Christmas week of trading tomorrow and figure out how to position ourselves potentially for the period, which is the technical Santa rally, if it's going to happen between Christmas and New Year's. Thank you. I'm working on trying to stay warm. Thank you, CD, and I'll talk to everyone later. Bye. Thanks again for both the wonderful super chats. I really, really appreciate it. Bye.